Welcome to the Final Bar. I am Greg Schnell, the host of the show. This is the show where we check out the most interesting charts to get set up for the following week. With some intermarket studies, we'll be finding out inflection points for minimum risk and maximum reward. And boy, have we got a market. Uh, Thanks, everybody, for taking the time to join me. We have lots going on. We were down 800 on the Dow yesterday, down another 500 today. So down we go. Two areas that continue to hold promise are the gold area. It rallied nicely today and broke out of a base. So I think that's pretty important. Marijuana continues to consolidate, and I would say it's almost like a one at a time thing. They haven't been moving as a group anymore. It's kind of all of a sudden one stock will take off and move up 50%, and then it'll pull back 50%. But it's at least an area where there's some profit to be made. So we want to cover off a little bit of that today, and I'll get into some of the clues that we had. The market was going to have trouble, and then I'm not going to spend a lot of time on that, but then we'll get on to some other stuff. Okay, let's see if we can find my Safari. And there we go. Okay, so first of all, I left on September 21st, which is right about in here. And the market was, basically sitting near the highs, but we kept just barely above this trend line. And then October 1st, we kind of had this market breakdown. And I think the highs of the S&P compared to the highs of the NASDAQ were roughly in the last 2 weeks of September for the S&P and the last week or the first week of October for the NASDAQ. But as these things have come toppling down, we did have a lot of clues that were breaking down. So one of those clues was that this chart was getting weak and really didn't rally much in the middle of September. It was barely chugging along. So we kept watching it to see what was going to happen. Now, if we go on to the next chart, and hopefully this isn't news to anybody because I think I've covered off these breadth charts quite a bit. But what we saw here is early August, just a wobble, and then we had a rally. And then late in September, we've been basically declining all the time. And now we've really come down into an oversold level. So, we're getting to the point that, as this reaches this sort of an extreme, we'd at least get some sort of a bounce out of here. And then the real question is whether or not we've got more time to go. So the NASDAQ has pulled down quite hard. And if we go on to the New York, really ugly as well. And, just for perspective here, so this says minus 900. One of the things I really like about the platform is you can just go, say, okay, 17 years or something. Let's go back and see how that compares. And, we're getting down to a level that's kind of a once a year level. So this is kind of a place where we'd at least expect a bounce. And, what we don't know is, are we going to start going into this longer sort of sideways move or whatever? But we're getting these, this big sell-off. And this extreme level basically means we want to start looking for buying opportunities, not looking for selling opportunities. It's a little late at this point. So, and that doesn't mean the market can't go down further, but it does suggest that at least we're getting to a point in time where normally a bull market rally would kick in. So that doesn't mean you want to buy before it's kicking in. You want to wait until you start to get some big signals that's going to happen. So here's the New York high-low. And what you see here is a moving average of the high-low pushes it down, way down. And on the just daily high-low readings here, we're at the extreme readings that we were at back in February. And so, and that was for yesterday. And now again today with another 500-point decline, we're obviously going to be messy way down there. And again, we can just grab this and slide it out just to see how that might look. So we're at minus 500. In 2015, 2016, we got deeper pulls than that. But again, once you get down into this level, we're sort of at a place where we'd at least expect a rally, and then we'll watch how the rally behaves. I'm of the belief that we're going to spend a little bit more time going down after this. And the reason for those beliefs are over on this chart. And what I talk about here is this is the bullish percent index. And normally we like to be up between these red bars. And lately we've had declining tops on these. And then what I'm wondering about is how much further the market will push down. So here's the minus 40 level, if you will. And on this, or 40% level. And what that means is only 40% of the stocks were on a buy signal. And down here, and this was at yesterday's data, not even today's data, only 35% of the stocks were above their 200-day moving average. So if we just move this line, and I'm just going to pick 35, 34.90, and put this in, and what you see on this chart is just that when we get down to these levels, typically you're in a meaningful decline. This is the kind of place where big declines start from, or can start from. Now, some of them, like in 06 and 2010, this was the bottom, and then it was another multi-year, or at least 6 or 8 month rally out of that hole. The one reason that I don't think that's where we're at yet is because we've been up here for 2 years, which has been one of kind of the longer runs. And so I'm expecting more of a time lag on this. And just the fact that the rest of the world is breaking down suggests to me that it won't be so easy for us to go and take out those highs right away. Now, for the NASDAQ 100, we're at 47%, which is down around here. So when these levels are dropping so far, it's really a helpful clue to us. But again, after being up for so much time, it looks more like this sort of thing to me. And now we're going to spend, whatever, 6 months trying to rebuild a base here is kind of what I would expect. Now, I don't know if we need to go down a whole bunch more before we get some sort of 6-week rally or whatever. But the real question is, as we, with this, with the amount of participation or the lack of participation, it's going to be very difficult to continue to take out new highs. Okay. Just to kind of map a couple of things. So here was our Fed meeting, and it was kind of right between the two peaks of the S&P and fell off from there. And then we also happened to have the options expiration that was sitting right there, and it was a quadruple witching, and that actually marked the high in the S&P, didn't mark the high in the NASDAQ, but you could see that both of those two kind of were right up there where the highs were. So it was an influential point. And here we are down, a couple hundred S&P points from that point already, and it's only been 2 weeks. So I think, again, I think those quadruple witching are important. Okay, now I want to go down and just quickly cover off some gold stuff. And the reason I want to cover off the gold is because I think there's an opportunity setting up there for a bigger run, like a multi-month run. And why do I think that? So first of all, here is the PPO down on the bottom. And what you see is, we had this trend line. We've got a buy signal setting up here on the PPO. And it's broken a 6-month downtrend line, which is usually a pretty good place. We were right at support. We've moved above the 50-day moving average. And today we had a beautiful move of 33 or something like that dollars on gold. Now that broke above a 2-month area. It was the big move that we saw, like the $30, plus the fact that we took out 8 weeks of resistance. That's pretty important. And you can see on the full stochastics, we're starting to push higher. And lastly, we're starting to break out on relative strength. So if I was to look for signals, this is the group of signals I'd want, and we're getting the PPO cross now. So this looks to me like it's just getting started, like we're in our first week. Yesterday or today was kind of our first couple of days in the move. And I don't know if we get the one like we got in 2016, but you can see we had that same sort of big bullish thrust. And you might remember in 2016, everything kind of crashed down into February 9th lows. The S&P ended up pulling back at that point in time. In the meantime, gold went on a big rally, and the rally in gold was big, but the rally in gold stocks was huge. So gold was up 40% or something like that in here, but the gold miners were up 150%, and that was on average. So that's why I think there's a bigger opportunity there. So when we look at gold, this is GDX, the miners, and we had built this kind of base. And on the weekend, we're just getting here and it looks like it wants to kind of round over. Well, on Monday, I think we came into a big kind of down day and then rattled. And then yesterday we opened, tested the lows, broke out, broke below kind of the couple days before, and made an outside reversal bar, which was nice. And then today just extended straight through that. We're back above the 50-day moving average, and we've broken through this base. So I think we're going to start getting some attention, and that's a really important part of this. When we see this downtrend line on GDX, GLD, usually that's also a place to want to get long. And so again, we're on day one of this. I don't think this move is over. I think we're just getting going. But when we get these big moves where all of a sudden the gold miners start to outperform gold, and on the previous chart I was showing gold is outperforming the S&P 500 now on that purple area chart. If you want, I can just go back and show you that again. Not on that one, on this one. So basically gold underperforming the S&P 500, and then all of a sudden it starts to break out. And as it starts to outperform, if you're a relative strength manager, you're trying to find things outperforming the S&P 500. So when this starts to happen, that's a pretty valuable thing. So I have a chart here, and we can do it as GDX ratio, GLD to the S&P 500. What you see here is we had this big downtrend, and then in 2016 we kind of broke above in a big meaningful move, and it kicked off. But while that happened, it was the gold miners that really made the move. And so we're just getting going here with, we've broken this downtrend, had a big kick up, and now we've got GDX starting to rally here. It had a pretty good day today. But as this starts to come up, we want to get through this downsloping trend line. I just think that there's all of the signals for gold with relative strength starting to break out, and all of your buy signals that you would normally look for starting to show up. It's a good place to look for a nice entry. And again, back in 2016, when the equity markets were having trouble falling into that February low, gold was just getting going and made a beautiful move. And actually, gold, the ratio of gold to the S&P peaked out at that February low, but the gold miners continued to go on for another 6 months. So even if gold can just get started here, that could start enough of a rally that moves money in and actually starts a rotation that investors are trying to find what's moving, what's, instead of everything going down in the portfolio together, they're finding something that they can buy on that's not already overbought, and take a position in. So I think there's some big opportunities here. And you can see if I had a trend line down here on GDX, it broke out, not really as gold broke out. It actually took a couple of weeks to do it. So it was, the breakout was, call it the third week of January, and up here the breakout was late December. So even as this started, the gold miners didn't necessarily start, well, in this case, they're already up almost 10% off the early September lows. And I would expect, I think there's much more to come, just based on how big the setup is for us. Okay, silver is also in that same bracket. And what we see here is silver still trying to base build, but it was right at major support. So just before I left on my trip, and I went to Bali, where they had another earthquake today. So I was happy to be inland and away from earthquake zone, because they've been getting shook up quite a bit. But it was interesting when I was there, because I kept thinking, the earth around there is so unstable, and these people are just, comfortable with it. And then I thought about how I look at the stock market, and when it's unstable, I'm kind of comfortable, just trying to look around to find value in there. And the point I want to make is that when you're least certain about something, it's a great time to try and put on good trades, because you can usually set up a stop that's relatively close. But more important, if it starts to run, you've got some serious room for it to run, and that's really helpful. You don't want to buy something that's already, kind of extended like this, and then you're starting to add to the position. You want to get it as it's testing support, just starting to break out. I mean, we're in the first week or two here. And so if something could start to gel together, it would be great. And I realize it's an out of favor trade, but it's, it's these big reversals where it was testing support here, testing support, took 3 or 4 weeks, wasn't really doing anything. And then all of a sudden, bang, it took off on a nice big move. And it's easy to draw your cursor through this nice big move, but it was up, chop for 6 weeks, up, chop for 3 weeks, actually pull back quite hard, and then up for 4 weeks. So it's still never easy, but it's just giving us a place to look. And I think with the outperformance in gold, it's a good time to try and place that. So I think the precious metals are a really nice area to look. This is SLV, and you can see the downtrend is still there. The PPO is just getting ready to break out. And so if that was to start to push higher here, I also like it when it breaks these sort of interim trend lines. And if we look at the silver miners, we had an outside bar, call it 3 weeks ago or 5 weeks ago already, early September, and that kind of marked the low. So it was higher high and lower low, and then tested lower, came up, stopped kind of where we opened, then pushed higher. Now it's pulled back, rechecked that low. This is a great place to look for it to extend from. And there's another little trend line here. So I'd watch over the next few days and see if these things can start to get rolling. But the stocks are doing really, really well. So if just to go up to the top here, first of all, let's start with a summary look. So this is the one-day move in a lot of these gold stocks. They were up 6, 7, 8% today. And if we look, just go whatever 1 week, they're just starting to get going. So I don't feel like we're overextended. I know if you were a day trader, it's overextended. But if you're trying to get positioned for a larger move, there's still lots of time to get on board, I think. Okay, so if we wanted to look at which stocks are doing well here, some of these smaller stocks have literally exploded to the upside. So this one is up 110% in a week. In a couple of days, it's been big pushes, but all of these ones just, here's 40% on an 80-cent stock. That might be too small for you. But, Nugget was up 17% already in a week. And just working again, I think the move's only been 2 days. So picking a week, it hasn't really, it's not really fair because most of the stuff moved in the last couple of days. Anyway, look at these percentage moves, and we're just getting started. So I think there's some nice setups, and I own a lot of these, so I could click some of these buttons, and it might be a stock I own or not. But I'm not trying to get you to follow the stocks I own. I just want to show you the kind of setup that I like. So down here in 2017, you had this big pullback, long trend down in the PPO, started to turn back up, and as it started to move, that was a pretty nice clue. And the full stochastic was oversold and started to push above 20%. That was a nice clue as well. The full stochastic usually fires before your PPO. In this case, that would be true. Again, because the full stochastic has already given you, it's crossed its signal line a few weeks ago, and now it's crossing out of this 20% area. There's lots of room on this to move, just as an example. And so when we get these big downward sloping trend lines, there's really nice longer setups. So for people who aren't trying to trade in and out like the marijuana stocks, you pretty much got to take what you can every day. But here's Seabridge Gold. And what I like about this one, look at this giant base that's built here with, call it, peaks around 1750. So just put a horizontal line on here and say 1750, and we'll make it solid and we'll make it blue. Just okay. So here's our line as it shows up, and what we see here, we're just breaking out to a new 2-year high on this stock, closing at 1832. We were at 1765 in here. So we're getting back, but look at all of this consolidation. So you have to remember that gold has been, really beaten down for a long time. The highs in gold were up around 1900, and now we've traded around 1200 for a while, trying to get through that level. So if we look at this here, this is just a beautiful start. This is a breakout. I think it doesn't get much prettier than that. If we go look at something like Square, just not to pick a gold stock, but when you got this base here, multi-year base, and you start to break above it, look at what the stock has done. And not saying that this stock will end up doing that, but usually these big bases are beautiful. And we could do the same thing with whatever JP Morgan, big base. And then when it starts to move, these are really nice places to get on. So while it doesn't look big yet, I actually think we're right at the leading edge of the wedge, and it couldn't be a better place to get on board. Okay. So this particular list has Canadian stocks and U.S. stocks. So I'll just try and look for some of the U.S. ones here. Here's Oceana Gold, and same sort of thing. It's got a base setting up at around $3 now. Maybe that doesn't sound like enough money, but all of these are so beaten down. Back in 2011, I'm not sure if the stock was around then, but 2011, 2012, this is a 350 stock, so it hasn't improved much. But if I change this to ABX, Barrick Gold, Barrick was a $50 stock. It's a $10 stock now. There's a downtrend in price here. This is kind of the big daddy in the gold business. It's trying to do a takeout of Rand Gold, breaking our PPO trend lines. Like, there's everything about this I like. Full stochastic just starting to turn up. Scooter ranking moving above 75 for the first time in probably a very long time. If we went to the Canadian stock, we could see the original scooter ranking. So hasn't been up here for at least a year and a half. But even when it started to turn up here early 2016, like just moving above the 75, and it went on and on and on for 6 months. Really nice run. And again, this is a big stock. So look at the volume that started to show up right on the lows. There's the setup is, I think, really comforting. So I would encourage you to go try and find some stocks. Here's Goro. And, if we just look at this, the scooter ranking is above 75. The relative strength was fading. It's now starting to turn up. The scooter ranking, so relative strength, what that means is the S&P 500 is a group of stocks. And when this purple shaded area is sloping down, it means the stock is going up less than the S&P 500 or performing worse, like not as good. So it could actually be going up, but still slower than the S&P 500. So this would be sloped down. And then when it starts to outperform the S&P 500, it turns up. Well, when institutional investors find things that are starting to turn up, that's really attractive to them because they're looking for things that are outperforming. So as that outperformance starts to show up, this purple shaded area starts to go higher. The scooter ranking compares it to other stocks of its similar size. So in this case, small cap stocks, but it's behaving better right now than 88% of them. And that's because most of them are falling. So money moves towards what's starting to work. So all of a sudden this thing gets a kickoff. And what I like is this pushed up, then pulled back, and now looks like it's ready to take off again. That's just fine. Lots of opportunity here. PPO turning, looks like it wants to come down base at 0 and turn above that. That's a very bullish place for it to take a turn. So would really like to see that cooperate. Still got 2 more days of volume to show up this week to see if that's actually going to break out. But you can see moving above both the 40-week and the 10-week lines here after consolidating sideways very tightly for 8 weeks. So everything about this chart sets up quite nicely. Okay, lastly, the marijuana stocks have, marijuana legalization is in Canada next Wednesday. But what we have is a lot of stuff going on in the US where, first of all, the US don't want to lose all the listings for the marijuana stocks. So some of these companies are coming north or from north of the border to south of the border to list on the US exchanges. So Canopy Growth is already there. It's listed as weed.to in Canada, but it's listed as CGC in the US. I think it's, is it Afria? No, it's not Afria. It is Aurora Cannabis, I think, is going to list in the US right away here. And so that one's worth watching. And this Pyrus International, this one's just starting to move. I don't own it yet, but there's, you know, big moves like this. I mean, some of these things, the 10-minute chart looks like a monthly chart for lots of stocks. It's got, you know, $10 ranges on a 10-minute chart. So really wild, volatile stuff, but, you know, you only have to be in it long enough to make some money. So I think try and look at them. In general, if I went to the marijuana ETF, it's not really doing that much. I should just type it in here. It's probably easier. And what we see on this one is, you know, it's really been consolidating for the last month. I kind of thought it was topping out in, you know, early September. Well, it actually made a little higher high. But I think I learned something on the marijuana stocks. And what actually happened was lots of them made parabolic surges into the early part of September. And then after that, each one kind of fell over. Kronos would be an example. So, you know, this was a move from $6 to $13 in a couple of, you know, 10 days, down to $8 back to 13, down to $9 back to 15, and now it's pulled all the way back to 9 again. So huge volatility, but again, if you can just catch the upswing on some of these for a few days, they're very profitable trades, and you can get a year's worth of returns in a couple of days. So if that's too uncomfortable for you, I get it, but it's also hard to resist when they're starting to move that well. So the big one is Canopy Growth, and again, it peaked early September and it has really just gone sideways. It hasn't done anything either way, so it would be hard to own it right here as it's making these sort of sideways moves. And again, Tilray was the big one, and it went parabolic. And what has it done now? So after going to 300, it fell to 97, 173, down to 122. And I think, you know, you could draw a line across the top here, and if this starts to break out again, you'll see people start to enter it. The one I just mentioned, Pyrus or whatever, a lot of people think it's got the potential to do the same sort of trade as Tilray. I don't have a feel for that. I do not want to know about the major fundamentals, because lots of these companies don't make any money. It's all about price action. And so if you want to try and find some of these fast moving ones, I think there's some great ways to trade it, but you don't want to be on a daily chart trading 10-minute stocks, or trading stocks that are moving so fast in 10 minutes. So again, this stock is PYX. So here's a 5-minute chart, and look at the scale. This is $35 to $52 in 3 days, and you know, just from the morning low, 36 to 46 in about 3 hours. So a 25% gain in 3 hours. Lots of volatility if you're interested in that. So to wrap it up again, let me just go back and look at the slide here. You know, we're getting to the point on the pullbacks that the bases are starting to be set up there. What I think is more important is start to have your shopping list ready. There's been some great pullbacks and some places that you can look for some money. On this next rally, that's when we really need to worry, after we get going for a while, about does it have the strength to continue. But I think now that you're near the pullback bottom, based on some of those other graphs I pulled up, you don't have to buy it yet, but we're getting to that point. Okay, so thank you for joining us on today's show. The Final Bar airs live on Thursdays at 5 p.m. Eastern. It can also be found on the StockCharts TV schedule at other times during the week. In addition, you can look for it on the StockCharts YouTube channel. With that, have a great weekend and good trading.